Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Thursday morning. Yesterday was an interesting day to say the least. So let's talk about it from a perspective of data, right? No drama, all data. And I'm going to show you all the CME FedWatch tool. Now, if you Google CME FedWatch tool, as I've just done, Google will give you this link right here, which is a study of a futures contract called the Fed Fund Futures. And what they are is actually they're synced to the meeting dates, number one. And number two, they are going to show what those futures contracts are speculating over whether or not the Federal Reserve cuts, hikes, hold, whatever the monetary policy direction may be. And they're remarkably accurate. Yesterday, it was 90+%. Even before, days before the meeting, it was 90+% that we were going to get the quarter point cut, and the cut we got. The challenge, and for those of you wondering, what the heck happened? What does it mean to have a hawkish cut? All right, that's just stupid languaging, number one. It's just stuff that television likes to say because it's just compelling enough to listen, but just confusing enough not to understand. Isn't that funny how financial media operates with this language? All right, let's decode what happened. The plain way, the psychological way of looking at this is we already knew what we were getting in December. In fact, we weren't rallying the last few weeks because of a hold in December. There was a cut. There was a cut that was implied, that was discounted, that was expected. And into that, we rallied. And is it the only reason we're rallying? Of course not. But it's a big reason. Now, everyone's heard the saying, buy the rumor, sell the news. I don't really like that saying, but the gist of it's correct. Buy the rumor, buy the expectation, right? Sell the delivery, sell the reality. So buy into the expectation, the anticipation, sell the reality, sell the delivery, right? Sell the actual event where you get the thing that you thought was going to happen. Now, what makes this even more interesting is that the January meeting, where if we saw the rate cut in September, so the last three meetings, we've had a total of 100 basis points or 1 full percentage point in a 50 basis point, 25-25 delivery. Equity markets want more of that going forward. And January is the first time since the cuts that we don't have clarity on that. Now, gang, it's December 19. January 29, the next meeting's well over a month away. There's lots of data between now and then. There's an inauguration. There's a non-farm payroll. There'll be JOLTS. There'll be PCE data. There'll be CPI data. There'll be all sorts of data that we're going to be getting between now and the end of next month, right? So this could change a lot. But right now, what we know is that Jerome really doesn't plan on cutting in January, or at least knowing what he knows now, doing what he did now, he doesn't plan on it. Doesn't mean they can't change their minds, right? It doesn't mean that at all. It doesn't mean that we may not get a cut in January. We just don't know. And as much as the market hates not getting what it wants, markets are 3-year-olds, gang. Please do not presume these are the smartest people with Spock-like, non-emotional reaction. No, gang, this is a 3-year-old on, I don't know, name your sugary cereal. This is a 3-year-old on sugar. That's what this is. That's what the stock market is. So if we could just abandon this idea that the most Zen-like, disciplined people are in this game that we play, no, just no. And you saw that yesterday. Imagine the 3-year-old is throwing themselves on the floor and kicking and screaming. That's what yesterday was. All right, so then now we step back and say, what was that move? So you'll see there's some labels on my chart. And that's something called a sanity check. So when we get a pullback, everything has sort of a label, right? So 1, 2, 3%, we don't love it, but we kind of accept that That's the reality. 1, 2, 3% moves are not, 3% especially, not super common, but they happen. It's not the end of the world. They happen though. And they're pretty big moves. Yesterday was just over a 3% move. Okay. Almost getting down to a 5% move, which on the S&P from the high of 61.63 and 3/4, 5% is 58.55. 3% is 59.78. We got roughly to 59.07 or whatever that was, right? What was the previous session close? We got a low down at 59.07, but the close is 59.39. All right. So today we're getting a little bit of a pause candle. It was such an overreaction. Now, some of you might say, Rog, do you buy into a day like yesterday? I do not. I do not. It's gone too far. Never. Right? We already have positions. We're managing a lot of them. If we rally a bit today, terrific. I'm going to scale out of winners that we've already position sized, like Amazon, well ahead, Wells Fargo, well ahead of yesterday's event. Does this undo some of the gains? Yeah. Are they losses? No. Right? So some of this has to do with when those positions were built, what was paid for them, and then what yesterday really meant. Probably the biggest question people are asking me is, and I got quite a few emails on this, does this undo the Santa rally? Gang, the Santa rally is not December, right? If you look at what the Santa rally is, it's a very small week, basically, that's from Christmas to New Year's. So it's quite literally a Christmas to New Year rally. December as a whole is a month of tax loss harvesting, which is going to be concentrated at the end of the month. It's a performance chase or window dressing, which again can happen all month, but it'll be concentrated at the end of the month. So the question is, does this undo the Santa rally? Here's the thing. The Santa rally is not a setup, right? It's just a tendency for things to go higher. Would I anticipate things to go higher, even after yesterday? Yes. Now, let's also keep in mind, being bullish is not the same thing as buying. And I've been saying all year, I'm bullish. And by the way, I still am. But being bullish is not the same thing as I'm going to buy today. Being bullish is I'm looking for buys. So looking for buys means I'm looking for a pullback. I'm looking for a setup. If that setup yesterday was something that I wanted to pass on, and it was, remember, we have one more event coming tomorrow, and that's OpX. Options expiration is going to be a whole lot easier to manage and understand where the support and resistance may be. Because yesterday, that was the problem. Am I going to stop in the daily price movement range? We already knew in the Sector Secrets Mastery, there's a good chance we could not only get to the conservative level of the DPMR, the daily price movement range, which is a volatility study, we could go to the first or second standard deviation. Now, rather than guessing, which we didn't, we wait. It's a very simple setup. Wait for Jerome to stop talking. And by the time he stopped talking, I know most were like, oh my gosh, Jerome, stop, right? We kept seeing lower lows and lower lows. His mouth was moving, lower lows. By the time he was done, we were so far beyond the typical 68% volatility. It was just time to say, you know what? We might bounce tomorrow. We might make lower lows tomorrow. We already have a winning December. When I look at the alerts that we send out in the mastery, when I talk my book, and I look at everything we've done, whether that's entries that we entered in late November and we're managing into December, or triggers that we took in December, we're still ahead. Yesterday doesn't undo that. And the reason it doesn't is twofold, okay? One, we're not buying into highs, where a day like yesterday is frankly darn near catastrophic. If you're long from 61.53, that's going to stop you out. There's no reality. Right? If someone bought at a high and they're looking at account management, that a candle like yesterday is something you just sit through, right? I can't even imagine. Now, the other thing of it is, and I saw this I think it was an Instagram post or a tweet, and I loved it. If you didn't lose money today, now this is referring to yesterday. If you did not lose money today, you're in the top 5% of traders and investors. If you made money today, you're in the top 1%, right? We're already positive. So I won't say I made money on yesterday's move, right? We didn't lose any money. We closed out some trades. And on the whole, when I look at cumulatively, our book of trades, we're up, okay? And that's what I want you to think about. Can you sit through something like this with the book of trades you have and still say, I'm up on the month, or I'm up on the vast majority of my positions. Maybe some are going to get trailing stopped out. Maybe some are going to get paper cut stopped out. I had 2 paper cuts yesterday. I took off telephone and Citi, cut those. But I still have a number of trades that are at second targets where they pull back to the first, and I scaled out. Right. So it really wasn't a disastrous day. I don't say that to go, oh, Rob, good for you. Not at all. This is exactly what happened in the mastery. This is what our mastery traders went through as well, because, my trades are the mastery trades. My setups and alerts are what I'm looking for. So, not a lot of, I will say, it was really pleasant. In our room, we were shopping, right? That was a blue light special. Is there anything we bought yet? No. So for those of you wondering, Rob, did you buy anything yesterday? No, I by the time Jerome was done, the carnage was such that, you know what? Let's just take a break. We had 8 or 9 open swings rotating from November into December, and we're in the last 2 weeks of the year. I don't need to undo what is a positive December. We don't know what's next. And Jerome has put a giant question mark over the path of monetary policy. All right, that's kind of a synopsis of yesterday and sort of a mindset to keep. All right, so no, I wasn't buying yesterday. How did I manage my positions? I managed them by knowing where, I'll give you a great example of a loss. And I walked through this with the mastery folks. So I'll give you all the cliff notes. Basically, I had a long C position, which was marginally up, marginally down, marginally up. I don't like financials, but this is the best looking stock in the top 14 names in financials. And I thought, we'll give it a shot, right? Okay. The stop loss got hit yesterday. Was it a max debit? Of course not. All right. If you've been watching me for any length of time, I'm not going to use 100% stop loss. When the sell-off started happening shortly after 2:00, we started moving lower. The sell-off actually was a whole lot more organized than maybe a daily or hourly candle would reflect. We just dial it down to a minute by minute or 5 minute by 5 minute look, and you'll see it kind of very slowly, not slowly, but it organized in an organized way. It wasn't a gap, okay? In an organized way, it sold off minute by minute until finally it took about 15 minutes in the zone of where I had to cut Citi. And so I cut it. I don't have my recap up right now. But we cut it, okay? And it wasn't as if we were panicking. It wasn't as if we were, hitting the bottom, get me out. Nothing like that. It wasn't like a scene out of Trading Places, right? It's just, okay, I lost enough premium. It's time to get out. And that's it. No adding, no rolling, no denial, no justifying. Just take the paper cut, right? Kill the monster while it's small. Now, after that, it was carnage. We're not in it at that point. We have our set account risk, set contract risk, and then that's it. And some of these moves, especially if you use alerts, are really pretty easy to manage. I'm not saying they're always going to be easy, but if I can get out in an organized way of something like Citi in the throes of the sell-off, you can kind of think, gosh, Rob, on a normal day, it's even easier. And yeah, that's super important. And I never add. My gosh, gang, please don't do that. That is not a trading strategy. Adding. Every setup should be valid. Every entry should be valid on its own. Adding is not a strategy. Adding is actually throwing your canoe into the river of denial and paddling away. I don't want to see a loss. I don't want to realize a loss. Let's just add until we can have a cost basis so low that the most marginal of bounces allows us to get out positive. You might say, Rob, what's wrong with that? What's wrong with that is we're playing depreciating assets with options. They're going to expire, and on the path to expiration, they're going to continue to lose part of their value, part of their premium value, because of the natural, state of anything that depreciates. It's rotting, right? It's just slowly rotting. All right. So what if you're taking 30, 50, 60, 70, 80, 90% heat on the value of the contract, right? And you get stopped out and it's a large position. And on the flip side, you're maybe taking a small gain that isn't in balance with the amount of risk. Again, unrealized risk matters. It's usually swept under the rug. Nobody wants to talk about unrealized risk. I'll talk about it constantly. The reason being is unrealized risk could be realized. Just because we don't want to take the loss doesn't mean at some point we may not have to. What happens to traders is they take tiny little gains, they pat themselves on the back because they have some outlandish win rate. Win rate is only a tiny part of the story. If someone ever, including me, says, hey, I've got a whatever percent win rate, the first question following that up should be, that's awesome. What's your average loss? What's your average gain? Right? Because the win rate just says how many times out of 10, for example, or 100, we win or lose. Right? So for every 100 trades, I win 80, I lose 20. Okay. Did you know you could still be negative in your account with an 80% win rate? Of course. What's the average size of the loser? What's the average size of the winner? Or what are your 3 biggest wins? What are your 3 biggest losses? These are things that I look at and teach the Sector Secrets Mastery to do, because the math of account growth is simple, but it's brutal. And it really does press a trader into looking at their results really honestly, right? Nobody else cares what you're doing or not doing, right? At the end of the day, you've got to look at it with honesty and say, hey, am I chasing a win rate? Which is, again, a tiny part of the story that can actually misrepresent what's really happening under the hood? Or are you looking at every entry, every exit, every day? What is the typical size of your loss? What is the typical size of your gain, right? And we'll talk a whole lot more about this next year, because one of the things folks ask me a lot of is, hey, Rog, hey, how did you do in 2024? What was your P&L? Somebody asked me in the room the other day, what was your P&L last year? And my answer was really simple. If you asked me in April, we were up almost 300%. If you asked me at the end of April, my account, after gaining almost 300, actually almost 300, but 240. So I'm averaging up a little too much. No. What was more than that? Anyways, we were up. I lost 11% in April. Okay, so if you ask me at the end of April, take 11% off the gains of January, February, March. All right, the second and third quarter were pretty meh. Fourth quarter was bonkers. If someone asked me at the end of November, Rog, what was your win rate in November? We had numerous trades we lost twice, right? Oh, okay, nope. Now here comes December. In the first 3 days of December, even though we're up, I lost more in the first 3 days of December than I did the entirety of November. Looking back is not for traders unless you're studying the patterns and the habits of success and too much risk, right? What I did yesterday, what I did last month has no bearing on what I'm going to do tomorrow. Probably one of the smartest things that these governing bodies put in all those disclaimers, and probably the most honest thing. The rest of it is just, whatever, but past performance does not guarantee future results. I say that all the time, right? I remind myself of that all the time. November was a wonderful month. It went straight up. It's actually hard not to make money in November, right? December's been more challenging. It really has been. So if I look at November, it's the underlying market behavior that gave us that month. But by the way, 2024 as a whole has been outstanding. And I don't want to rub salt in a wound, but if you're not up significantly this year, the trading style and the mindset you have, and I'm just going to say it, was wrong, right? If you're not looking back at the last 4 quarters and saying, yeah, I had some challenging quarters. April was my most challenging. By the way, when we had July and that other sell-off we had in November, we actually made money. Sorry, not November, September. We actually made money in that yen panic in September. Why? Because the trends were actually indicating defensives like utilities and staples were where we wanted to be, right? So if you're not thinking about this, and I'll give you all numbers next year. Okay, I'm still going through December, but yeah, next year Q1, heads up. By mid-January, I'll definitely start showing you a whole lot more of what we did. And by the way, it's not going to be just a cutesy little graph, right? When you break down trades, I use TradesViz. And anyone who's caught a webinar that I've done in the past, that I'll share with you, not just the cutesy little graph, but how many dollars I started off with, how many dollars I ended with. I like to reset periodically through the year. So I'll pay myself, take money out of the account, maybe put some to work in shares, which I did a lot of this year, or I might put it into something else. But throughout the year, but that's not really the story. Again, that's a small part of the story. Then you'll see what the average hold time was, the average gain, the average loss. And that's where really you start to get the ability to fine tune your approach. So yeah, definitely stay tuned. We'll talk more about that at the end, well, probably the beginning of next year. Heads up, probably mid-January, we'll start talking a whole lot more about that, because at that point I'll have the year done. And I want to take a little bit of a break as we go into the new year. I don't go on vacation. I mean, vacation from what? Something I can do from a laptop anywhere on the planet. But yeah, between those times, the volume drops. It's a good time to take a breath, think about what you did well and not so well in 2024, and just be better in 2025. So gang, yes, I'm still bullish. I'm still going to focus on the most bullish sectors, the most bullish stocks. But I'm going to be a little cautious. It's already been a good, what's up, doggy? It's already been a really good December, and we've got about 10 days left of it. Don't need to undo it, right? Okay. Hope that gives everyone, just take a breath. This is not the end of the world. I promise you, gang. How many ends of the world do we have this year? On the way to how many new all-time highs? Oh, yeah, it was the end of the world in August. It was the end of the world in April. It was the end of the world again in September. Oh, yeah, let's not forget the end of the world at the end of October. And now we've got a December end of the world. Wow, the world's really dodged a bullet. All right, gang, be good to each other. I'll talk with you soon.